All right, July 6th, we've got less than 1 minute till open. Exactly what I charted out and planned on Friday when we closed at 12:30 p.m. because of 4th of July is kind of carrying out today, Sunday evening going into today. And what I mean by that is we had this bearish candle, this 6 p.m. 4-hour candle on Sunday, come down here, fill this inefficiency, and perfectly reject above this 1-hour gap that I think that we have a decent chance of returning back into for two reasons. In order to clear this 10 p.m. liquidity right here on the 1-hour and 4-hour, and right below this we have resting a 4-hour bullish gap. Kind of the logic here was that we on Thursday we entered this 30-minute bullish order block, which depending on how you look at it is also like a 1-hour bullish order block with this candle here, perfect up close candle with a massive wick. So we rejected here, which also ends up rejecting off of this bullish trend line. Okay, one touch, two touch. This I would consider, I guess, three touch and then four touch. And big picture, what this is a part of is a massive bull flag that I could see us carrying out sometime this week and ultimately driving price to take out all of these highs. And then once we take out those highs, I think that, we can start downtrending from there. But I just don't know exactly when we would take out these highs. But point being, we are respecting this trend line on the buy side and on the sell side. So that being said, we rejected while entering a 30-minute bullish order block and touching this trend line. Then we had this change of character right here. You can call it a change of character, break of structure with this up close candle. And you can kind of clearly see this up close candle on the 15-minute taking out this this high, so making a higher high. Then price grabbing liquidity up here to then downtrend. So price action from here was not there on Friday. I did not see any of this price action on Friday. So what I predicted was that we were consolidating here, generating liquidity, and we were in a 4-hour bearish fair value gap. So that being said, I predicted that we would clear this sell side liquidity for two reasons. We are in a bearish gap and we have a bearish SMT divergence. Because if you look at ES at the exact time of this high and this high, ES did not make a higher high, ES made a lower high. So in a bullish context, that would mean we are temporary or long-term bearish. The reason why I say temporary and why I think it's temporary in this case is because we have all of this bullish liquidity here, and big picture, we're respecting this trend line and this 30-minute bullish order block. Now, I'm not one to really respect trend lines unless I see a big picture on a much higher time frame, like a 4-hour or 1 day. And if it's respecting that trend line, especially if it's a pattern, like again, I don't trade patterns, but if I see something that it's respecting on buy side and sell side, I will take account for it, because patterns exist for a reason, right? They're not something that should make you enter the trade, but it's something that should really like substantiate your reason for taking the trade eventually. So that was our change of character. SMT cleared out sell side liquidity. Market opened 3 minutes ago, by the way. We came down here, filled all this inefficiency. Now let's just get rid of stuff we don't need. Okay, so we have a 1-hour gap there. Technically 4-hour as well. That's some liquidity we can clear. We have a 4-hour bearish fair value gap right here. 4-hour bearish. We're currently in it. Now what we do here, I don't know. And we're in a 1-day gap. That's the thing. It's so difficult to say that we want to take longs. We've had a lot of 1 day gaps lately, a bunch of 1 day gaps, like almost too many. 1 day gaps, 1 day gaps, 1 day gaps, 1 day gap, 1 day gap. Like I don't like them. I don't like them because the second price enters it, it's like you don't know when that 1 day gap will carry out, if at all, and it's always contradicting your bias. Which in this case we want bullish, but we have a bearish 1 day gap. So it's a little difficult to have a comprehensive idea of what direction price is going to push, but we're not going to worry too much about it because we have a lot of time for that 1 day gap to carry out. So I'm just going to act like it does not exist until we have a clear rejection off of it. I'm going to compare this to ES. Yeah, both of the pairs are in sync. So until then, we're just gonna wait it out. All right. So if you look on the 15-minute, you could see this intermediate low right here that we have just swept, and look, we could disrespect this intermediate low any minute, but I'm gonna explain it. Because if this candle body on this 15-minute closes above this candle body right here, then that is confirmation for me to take longs. Now the intermediate, what makes it an intermediate is that we have a bullish gap right here on the 15-minute. Now intermediates on the 15-minute, 30-minute are not as influential as ones on the 1 hour, 4 hour, but turns out that right at this level here, I believe we have I think we have like a London low or something. I'm not positive, but we have a candle body on Monday at 4:15 a.m. So that 4:15 a.m. candle close within this gap, but the wick kind of fill all of this liquidity. Now, this gap, it's a gap that still exists, but it's been tested plenty of times. So if we're able to respect it again, meaning with a candle body closing within the gap and a wick sweeping the lowest low within the gap, that would be a sweep of an intermediate low. So an intermediate low in a bullish context is a sweep of the lowest low within a bullish fair value gap. So the lowest low within a bullish fair value gap is an intermediate low, and then if price sweeps it, that would be an intermediate low being respected. In a bearish context, it would be the highest high within a bearish fair value gap, and then if price sweeps it, that would be us respecting an intermediate high. So we've just swept one. It looks like we're respecting it. 15-minute candle just ended, so honestly, it's not a bad time to take a long. I mean, I don't mind this. I just don't mind it at all. Here's the issue. We don't want to get too excited. Because we have this right here that I think that we could very easily grab as liquidity and then reverse, but also maybe not, right? let's define our risk for a second. I do want to wait for a slight pullback down, but let's define our risk. Let's say we enter right here, and our risk is right here. That's 150 times 2 is 300. 500 divided by 300. We could trade 2 micros.
Order filled.
I think it's a good entry. Ended up coming down here, filling this bullish fair value gap right here. That is our max loss. And our TP will be somewhere right here. That's the trade. That's the trade. And I guess with this trade, the TP is within the 50% range of this right here. I will feel it out though, because price could reject right here, and then I might sell for early TP, and I'm perfectly okay with that. But until then, we're gonna wait it out. All right, quick thing to note. Once a rule I've put in place for myself, which I do recommend, is once you're 80% of the way to your take profit, you should move your stop loss to break even. And the reason for that is through thousands of hours of looking at candlesticks, seeing strategies play out, I've noticed that once you're 75, 80% of the way to your take profit, if price decides to pull down, so let's imagine price is currently, it's hit my 80% target, and I do not move my stop loss off. Once price pulls down, the second it reaches the break-even point at which you'd enter, there is like a 50% chance that it just plummets to your stop loss. So at that point, there's no reason to have your stop loss down here if your take profit already reached 80% of the way to your TP. When if you lost that, you could have just you could have just had your stop loss at break even. That's just something I've noticed. Whoa. I don't really like that. Not worry too much about it. There is no bearish SMT yet. That's just a deep pullback. Honestly, a point at which I could add position. I would not be opposed to adding like a contract right here. I would not be opposed to adding 2 contracts. That's a deep pullback. Candle body still closing within this candle's wick. And then if you don't see any kind of SMT, like that's kind of why I zoomed out to the 1 hour. This wick hadn't even taken out this wick up here, so it's nothing worrisome. But yeah, so I do think that we will definitely take out this high right here. I'm not sure how viable my 80%, this little visual that I've thrown on here, is going to be. I don't know if I'm going to obey it this time, only because I might just take profit right here, right around here. I might just take profit right around there. I'll see how price is moving. If we slam through it, I might leave it. And the second we retrace down, I'll sell. But otherwise, I'm okay with keeping it. So I'll resume once we're right around that level. All right, so I'm just gonna preface, we have 3 minutes till the 1 hour candle closes. If in those 3 minutes we do take out this high right here, we do end up clearing that liquidity, then that is a pretty high time frame SMT divergence, a bearish one, right? Because it would look something like that. Because ES is a little further away. ES is right around here in terms of the highest it's been. So that is something where I'd see which would definitely make me want to sell early right at this level right here. Yeah, because we got 2 minutes. We got 2 minutes till we see that 1 hour close. Now, one more thing. This is the 1 hour candle. Look at it. This is something that is keeping my confidence that longs are still a good choice. Longer wick on the downside. More rejection. More rejection to buy side liquidity. Less rejection to sell side. Plus, at the end of these 45 seconds, if this candle body stays bullish, I really have no reason to worry. So let's just watch it, right? We have 30 seconds. Yeah, just to give you an idea what ES looks like, it's trading right around the same level still. We haven't taken out this high right here. Yeah. I really want that candle body to be bullish. But yeah, there you go. Thank God. That would have been kind of ugly if we did not stay bullish. So now I'll just wait. My overnight session indicator isn't popping up, so let me try to figure that out. All right. Here I've marked my London. So London low ended up being this low right here, the same as intermediate low. Kind of instilling more confidence that this is a valid bullish movement, and that price, it's kind of unlikely for price to come down here. Still possible, but kind of unlikely. We're really kind of just consolidating around this level. I don't love it. Then when you check big, like higher time frame, it kind of all makes sense. Oh. All right, we'll leave it at that. Okay, now because the 1 hour time frame, so 10 a.m. finished without price having crossed this liquidity level, it didn't create an SMT at the 1 hour. So, this 1 hour candle is still going. We reached our 80% point. I moved my stop loss to break even, and I'm just gonna let price ride. I think that there's a good chance we do take out this key level right here. I mean, it's not really a key level. It's just my 1-to-1 ratio. So I think it's fair for my 1-to-1 to carry out, because I do believe a lot of people entered at this point over here, at this candle over here, right when we inversed this bearish fair value gap. So I do think price wants to target this liquidity level, and it's not really worth selling down here. Let me just let my 1-to-1 carry out. If you have to sell before your 1-to-1, there's a problem there, right? There's a problem in either the strategy or in your psychology and wanting to not risk losing it all, but you still being within your 1-to-1 ratio. It's like the trade was shitty to begin with if you're going to sell early, because now you're at a 0.75 to 1 ratio, and in your head you're like, I'm smart for selling early. No, man. The trade was bad to begin with if your risk defined was less than a 1-to-1. So let it carry out. Have a rule in place where you can move your stop loss to break even once it reaches an 80% point, and then you just let price do what it wants to do. You let it sit. If it ends up taking out your stop loss, that's what it does. But imagine you just selling early and then price hitting your 1-to-1 regardless, and then you're going to tell yourself later, man, it's a 1-to-1. Obviously, price is going to target that. Whereas in this case, if it takes out my stop loss, I'm going to say, hey, I put my 80% rule, I follow that, and did I really want to take profit if it wasn't a 1-to-1 ratio? That's just, I mean, just feels shitty. It feels like a trade where your risk wasn't properly defined. So I'm more okay with it taking out my stop loss than me selling early. That's just me. Because I'm not thinking just for this trade, I'm thinking in the scope of 20 to 50 trades. Like, if I implement this psychology in all of those, I will be more profitable and more successful and more risk averse having followed this current rule instead of just selling early. But we're almost there. We're at a halfway point to this liquidity level and RTP, so I'll just let it sit. Then I'll resume whether it takes out my stop loss or if it hits my TP. Order filled, TP hit. That's the trade. Simple trade. Really all it was is a sweep of an intermediate low, which also ended up being London low. And then we had a 15-minute inverse of a bearish gap. And we entered at the candle body close. Consolidated for a bit. 1 hour, the 10 a.m. candle passed without us taking out this liquidity level. That, made me confident that I might not have to sell early at this level, that I could let price just kind of ride. And then that's exactly what I did. And we hit our 1-to-1. I do think there's a decent chance that we come up here, take our previous day high, or at least this key level right here. But in and out, 1-to-1 ratio. That's all you need. 500 TP hit.